Alright, hey guys, I am David for BigBits, and it has been a while. Definitely been on a long break, but I'm here to talk about some Bitcoin and other crypto TA. Look a little bit at some of the things going on right now. I hope you've been following me on X or Twitter. Been so long I've made a video that it was Twitter for a very long time. Since my last video or my last live, but one thing that I want you all to know is that I have been active there. I'm not super active, but I do post when things are important. And I just want to show you all the daily chart here. If you're coming to watch this video, I want to show you where I bought and where I told everyone to buy. Well, I didn't tell people to buy, but where I said I would be buying, and I think people should be buying as well. Let's go back to the last cycle here. Look at the highs, up around 69,000, and the precipitous drop down in price. I had always targeted 22,000. I'll tell you why. Get off of logarithmic there. The reason I targeted 22,000 area was because of this red line here, which is the 200-week moving average. This is where I wanted to start a DCA position. I had some cash reserves, of course, from where I had sold, I think around 48 or so. Like a lot of people, we were all kind of hopeful that things would keep going up. It became pretty obvious that wasn't going to happen. So I sold out a pretty good portion around 48 with a plan to buy back at 22. And the way I did my buyback was I initially said, you know, if this gets down to the 200 week, I'm going to put 50% in DCA within a range. I've removed the rectangles off the chart, but essentially, let's see, where a rectangle, here we go. It was essentially this range where I was a buyer with DCA. So let's remove the fill. Kind of noxious. There we go. All right, so I made my first purchase around 22,000 with 50%, and DCA'd in over the next however many months this is, 6-7 months, something like that. Once that candle broke out of the range, I really didn't have to DCA in anymore. Everything was really good, and I had these posted. You can go back through my Twitter account, X account, whatever, and look at that and see. I was really tempted if things went below 14,000, I think it was, to sell a lot of things that a lot of people probably wouldn't sell, and go in even harder. Now, one of the reasons I'm back right now is because I wanted to show everyone that right now we are a little bit overextended. And if you're looking at the weekly chart, honestly, we're still fine for bullish momentum, but this is a point where you've got to be a little bit concerned. This does look a lot like a little bit of a blow off top, but the question really is, does the ETF change everything? And it could. So what we think we know, we think this is a blow off top. You know, price accelerated very, very quickly into new all-time highs. It kind of really failed, not fully, but it kind of failed to really take off like you would want it to when it would break those highs. See, we didn't consolidate near the highs yet. It looks like that may be what we're starting to do. So what you would really want to see here is consolidation. If you're wanting to remain bullish, that is, you want to see consolidation and then move up here. Get off that drawing. And in fact, it actually looks not very good now because so you want to see some consolidation and then a takeoff. Consolidation and then a takeoff. I don't think a lot of people are expecting this to be the top for the cycle. I would be shocked if it was, but what I'm telling you is at this point in the cycle, this is not really when you want it to be buying. You want it to be buying back here when I was kind of advocating for my own entry, telling everyone how I was getting into the market, and it worked out really well. I think I had an average entry price around 18,000, something like that. And just phenomenal. Very happy about it. But once you get up here and you're overextended, you're above the weekly Bollinger Bands. You went pretty much straight up months in a row. There is concern that you're going to get these corrections all the way back down to this mid Bollinger Band or lower. And that is concerning. But one of the things that leads me to believe we are not at the cycle top is we get this downward expansion of the Bollinger Bands. We've done this every time with every cycle, is that if you look back here, the Bollinger Bands, look at the bottom here, they went to 0. That very, very low. I mean, they have to approach 0, essentially, the way that Bitcoin has blown off in the past. And again, it may be different now that we are at a different time, Bitcoin. Now, as far as my personal beliefs on where the cycle high is, I have no idea. I do believe it's over 100,000. But what I believe, and I have no reason to say this with any confidence, that we will continue consolidating. By the end of March, we'll get another push. This will create some sort of bullish or bearish divergence, I should say, right at the halving. Perfect time for a lot of people to dump because for whatever reason, that's what's happened in the past, right after halvings. So I could see a major correction back down. And I think this would be a good area as well. You have some consolidation back here in the past around this price level. So that's kind of what I see in the short-term future. But after this consolidation and a quick recovery back up to the highs, consolidation, and here's where you're going to start getting a lot of volatility. Keep in mind, this will be around August, September. You're going to be looking at election time. There's going to be a lot of news coming out. It's just something to keep an eye on around this time of year. But again, having usually a sell-off, but it's, like I said, it's just a different time now with the ETF. Things could be different, but that's just how I feel things are going to go. We definitely cannot keep up doing this forever. Where we slow down, that's to be seen. But let's look at the monthly chart. I really wanted to show you this one, and this one's a little bit more evident when you look at the downward expansion on the Bollinger Bands. You'll see it went well below 0 in the past on the monthly chart. Getting close to doing something like that, that's usually a sign that prices really kind of exceeded where it needed to. And you'll look, we've started off the month of March above the upper band, and we're well above it now. We went incredibly far above it. Not that that isn't normal. As you can see, we've done this many times before. Look at this month here. I mean, we could easily see something like this month where we have a nice candle like this, and the next month we start off right around the top band and blow off again. That's just one of the things about the bull market, is when you're riding those upper bands. And please follow Mr. Bollinger on X, because he does post from time to time about Bitcoin and the price action related to the bands. But you can see they actually work really well on a monthly chart. Riding up is usually pretty good for a while. Once you touch that upper band, a lot of times they continue upward. This one did not. It just was not time. That was just the echo bubble there. But you'll notice this a lot where they ride up the bands, and he calls that out himself, the creator of this particular indicator. He calls these things out on X. It's something you should look for. You should be following excellent traders like him to be able to get an idea. And you can see we touch the bottom band on the monthly chart, consolidated, moved back up. And one thing you'll also notice, we have the good break of the mid band here. You have a solid break like this. That was the time everybody started to get bullish. Even though we knew there was plenty of resistance back here in the price, we knew that since the Bollinger Band was broken, a lot of times when you first close with a good solid candle above the mid band, that is when you start your ride up to the top, and you take it and you keep riding. So who knows where we're going to be at next month? I have no idea. Anyone who tells you they do, completely full of it. But I really wanted to touch on this high level stuff right now, and I actually want to zoom even further out. Quarterly chart. If this is not the most bullish chart I've ever seen, really wild. Okay, bands are moving up, midline's moving up, bottom's starting to expand down. That means we're probably entering a high volatility period on a quarterly chart. See, we can go green many quarters in a row, and we just hit the upper band on the quarterly chart. You'll notice it did this here. It had another 3 months, closed way above it, down, back up, back up. I doubt, that's the first time you touch the upper band where you're going to end. So let's look at this is the BLX chart. This goes back a lot farther. And I got some drawings on here, so it makes it ridiculous. Switch back to logarithmic. Nope. There we go. Okay. You can still see the upper bands. The bottom band is just really weird because it's almost always below zero on the quarterly chart. But you see you hit the upper band here, and you rode it up for a year and a half. And this was the 2016-2017 cycle. It was really impressive. And then on this quarterly chart, we just kind of stayed near that upper band for quite some time. Always above the mid band, if you'll notice that. One thing you should keep an eye on here is that we did close below it down here. And every cycle, it's like we get closer and closer, and we finally broke it this time. Nothing really to worry about, but things do incredibly good. And you'll notice the pattern down here. You have this kind of plateau and a drop off. Volatility increased, dropped off down even further. Plateaued, volatility increased, price increased. Plateau, price is increasing. How far down do we go? I firmly believe this chart looks incredibly good. The quarterly chart, just wild to think about. Let's look at the 6-month chart. This chart also looks amazing. It's hard to find a high time frame chart on Bitcoin that does not look incredibly good until you get down to about the weekly, maybe the monthly, where you could see some resistance. But the quarterly, the 6-month, the yearly, everything looks amazing. Look at that yearly chart as well. Fully back above, back to high prices. You just can't really ask for much more when it comes to the price action here. It's really incredible. Of course, you kind of have to ignore a lot of the past when the price was incredibly cheap, but it is a pattern and it is built into the history of the price in the chart, and it's definitely something you need to remember. I don't know why I did that. It's been a while since I've done one of these videos, so I'm a little rusty. But there's the yearly chart on Coinbase. Absolutely incredible. You can see it a little bit closer here now. We're looking at almost a bullish engulfing candle last year. Now we are breaking past highs. We could have another 2 or 3 year run in us, starting with this one. So we would be maybe halfway through this cycle at this point, and considering we just broke the all-time highs, we're consolidating around there. That very well could be the case. But again, the ETF kind of changes everything. But let's get back down to the weekly chart. Fix the scale on our chart here. All right, so this is where we get into more like daily kind of TA, and it's been a while since I've shared much of this. But again, nobody knows what's going on with the ETFs. Can't predict how much inflow they're going to have and outflow they're going to have per day. I very much recommend you follow BitMEX Research on X, because they pretty much post that inflow and outflow total every single day. Gives you an idea of what happened. On the daily chart, you see we had a nice correction back to the mid Bollinger Band line. It's the first time we've tested the mid band line. I'm not sure if you would call this a test. Maybe. I think it got front ran. But the first real test since it broke, honestly, all the way back in January. Just a historic run of bullish price action. It broke that band here. So if you took that trade I was telling you about on the weekly, on the daily chart, you would have bought in $43,300. You would have been in the red for a little while, but you wouldn't have been stopped out. I would have set the stop at the low of this candle. And if I'm being really aggressive, sometimes I'll set it back lower to some other candles. But look at that consolidation, and it finally broke. So with this particular strategy that I've looked at in the past and that I've shared with people, you buy when you break the upper band after consolidating. That's kind of important. You don't break it. Don't necessarily buy when you break here. After consolidation, buy on a break, hold till it breaks below. So you would have bought 43.3, sold 65. Pretty solid strategy. Again, it doesn't always work, the choppiness back here, but when you're clearly in a bullish environment, it works. Well, I forget who shared that with me the first time, but that's a really incredible strategy. But that's the daily. You look at the 4-hour chart, consolidating. Could easily come down to around 60K. That is a pretty critical point. So one of the things I like about the crosshairs on TradingView is that you can see where you expect these moving averages to be at a particular time. So if in the next day or two we get this correction down to the 200 on the 4-hour chart, look at where that would be, where we tested here, where we consolidated here. So that's actually a pretty good argument that we would see price come back down here. And we could even see a break, a fake out down below. I have a hard time believing that breaking out down here. We retested the 100 here. We're clearly kind of ignoring the 100 here. I think what we're looking at, test of the 200, and I would look at that sometime around the 20th, if not sooner. Just my opinion, based kind of looking at the charts here on the 4-hour only. The hourly, this one's kind of concerning because you have the rounded top here on the 200, and we're still below it. We've got some moving averages acting at resistance. A quick visit back up to pretty much 70K, and then that run back down to 60 on the 4-hour. is kind of the picture I'm getting. You can kind of tell that when you zoom in and out of the charts, you get a lot better picture because you can kind of get an idea of the 4 hour. Let's go back to the 4 hour. The idea here is we come back down to the 200, and based on the indicators that I'm looking at here, that's a pretty good bet, in my opinion, that we would go down to the 200. But I said, price is going to be pretty choppy until then. I think it wouldn't happen until around the 20th. So let's look at the 1 hour. What can we expect to happen between now and then? I think a good bet would be another test of that 200, or just further consolidation within this area. But, if I were looking to short on the 4 hour chart, I would zoom into the 1 hour, look for a clear point where I can say, yeah, I would want to short here so that I can get that price action on the 4 hour down to there. So zooming in and out of the charts, that's where that helps you. That's the hourly chart. Let's go down to 15 minutes. Same thing. So you can kind of see now, on the hourly chart, we can see an opportunity for price to go up to a certain point. So let's look at the 15 hour. Now you've got this kind of bottoming out on the 200 on the 15. You can see where it can very easily come back up to that 70K target we were looking at on the 1 hour. So I can see that. Start to see these patterns and the different moving averages, support and resistance, and how at the different time frames they make a big difference on where you're looking at for entries on positions you're looking at. Let's drill down to 5 minutes. We've got a pretty good trend here on the 5 minutes, up here recently, consolidating around here. See if it comes up here again and it breaks, then yeah, it looks like it's pretty good to go up to 70K. Don't really recommend looking at the 1 minute. I let my pro subscription here expire because I haven't been selling indicators since I took a break from making videos. But one of the things you'll want to notice is if you're trying to time these particular entries, what I do when I try to time them, look at the 1 minute chart, the 5 minute, and the 15 after you come up with your targets on the 1 and 4 hour. So once I come up with the 1 and 4 hour targets, I'll look down at the 15 to kind of get an idea of where we're trending currently, if we are. And then I use the 1 minute and 5 minute to really pin down where I'm going to buy in. So I don't really care for these indicators right here for what I'm going to be doing. So let's remove super trend. Don't need that. Fancy triple moving averages. Let's remove that one. And let's add in oh no, it's already on here. Reload stochastic weights. I really should re-upgrade my subscription if I'm going to be making videos again, but that's completely fine with me. Not worried about it. Like I said, just use those particular methods of zooming in and out. So what I really like to see, and I'm just going to remove this one. I want to look at the stochastic RSI because that one is one I use pretty heavily with my other indicators here, particularly on the 1 and 5 minute. Okay, so we're looking here at the stochastic RSI. I just want to make sure you all can see this. When you start to get up here on 1 minute, that's great. 1 minute chart, I'm not going to give you much, especially with something like stochastic RSI. But when you start looking at 15 minutes, when you're wanting to really time these entries, what I do, I start looking back here. Let's see. So we got a dip down here. We were below. I like to look for ones that are very low, like this particular dip right here, where the stochastic RSI on the 15 minute got down pretty much next to zero. See that right here. You had another one right here, but this is partly where you need to be zooming in and out on your indicators. So take a look back here. That was also pretty low. Honestly, I probably would have been in back there, but it would have been hard to hold if you were just looking at the hourly. So that's why I like to do this with the 15, 5, and 1. Go back here. You're looking at the 15. You want a good opportunity while stochastic is low. You knew the stochastic RSI was very low on the hourly here. And even though price went down further, it was climbing. So that's a divergence. So you're looking really good when you're looking at this dip. See the cross back over here. That's really where you want to see that happen. Also on the 5 minute. So now you've got the 15-minute here well below on the stochastic RSI. You've got the 5 minute well below. So we're looking down here, and now you're wanting to zoom in even more. And if you're watching and you're trading, I'm looking at the 1 minute chart. Make sure this is the right one here. So we know the 15-minute is low in this area. We know the 5-minute is low in this area. Look at our 1 minute chart. So you had pretty much two opportunities where I would have looked to purchase. That would have been when this one came down. You would have been looking at 65, and you would have also been looking at 64.5. So that's kind of the power of zooming in and out on your indicators. And stochastic RSI is pretty good for it. I like my custom indicator a little bit better. And now that I've removed all the other ones, I can show you that one. The stochastic weights advanced. Okay. It's just taking a moment to load. So you'll notice we also kind of get that here. And what I really look for on my indicator here, the stochastic weights advanced, is these entries below very oversold, which I mark at 10, very overbought at 90. I look for those opportunities on multiple time frames, and you can actually see it create a nice divergence here as well. So let's zoom in and out, and let's see on this one. This is a 1 minute chart. We got a divergence on the 1 minute chart with this one. Go down into 5 minutes. Got a nice rounding bottom here. And again, we're zooming in and out on different time frames. This is 5 minutes, so we're kind of low on 5 minutes. And the further on this particular indicator you go in and out on your time frame, so like the further you go out 4-hour charts, the less volatility there really is here. It takes huge price action changes to really make significant moves down low. Since it's weighted with many different stochastic measures, you pretty much have to have all of the stochastic indicators down here near zero for it to get down here, and that's nearly impossible. Stochastic RSI alone jumps very quickly with even one green candle on dips, so it's hard to get down low, but you're looking for being around oversold, and it was. The purple line is just a moving average of the blue line, kind of like MACD, but you're looking for this blue line to come down under at the very least. Let's look at 15 minutes. Where are we at on 15 here? So again, under on 15 minutes. Where are we at with the hourly here? Now this one is even better. You'll see, like I said, there was really two opportunities to get in here that I believe I would have been very tempted to go in here. But one thing I've learned is I do not like to get in until I see a divergence formed. So you'll notice right here with this indicator that I use all the time, and maybe my head's in the way here, but one of the things I always do is I look for a divergence. Right here, I would have loved probably to have bought in based on what I've seen on the charts on the lower time frames. But here on the hourly, we didn't get the divergence until here. I don't feel very confident in a trade until I see a divergence, particularly one as strong as this. Very nice. Zoom out to the 4 hour, and that might even help us even more. So this was probably the first dip, and then you got your second dip here. You even have a divergence on the 4 hour, and like I said, the further you go out, the harder it is to get overbought or oversold. So let's take a look. Another one of my favorite plays is just looking for when we do get very overbought. That line goes above those levels. It was a perfect time to sell. Price had already went up back here. You had that divergence here. Like with as bullish as things were, I would have never touched a short or sold. But we already had a divergence. Price shot up again way too quickly. It got very overbought. And that's what these stand for, very overbought. It was a perfect time for a short scalp, in my opinion, right here when you're looking at that. Let's go back a little bit. I love this indicator that I made. This is a 4 hour chart. Very overbought here. So again, we didn't have a run up in price, consolidation, and then a move up. This was just kind of all one trend, so it wouldn't have been here. You had a nice divergence, and it would have been a great place to look for one. But again, it all ran straight up. Really, what you'd be looking for, this one, you have the divergence again. You have consolidation. So once you had that cross back down, that would have been the signal short. I would not short while price is shooting up, especially in a bull market like this. Let's take a look at another one here. So we got run up here again. There's a little bit of consolidation. Got a little bit here that would have been tempting to take. That probably would have been a loss. And then you see this one up here. Would not want to short that one, in my opinion. I would look to have tried to short here. You probably would have timed out trade or got stopped out on that one as well. But I really like looking for these opportunities, particularly in the bear market. We're going all the way back now, quite a bit. Go out to the daily. Here's the other thing. You'll see, again, the price is running up. I don't want to touch a short. I don't care if it's very overbought. You get a parabolic move like that, you do not touch your positions unless you're taking profits. And then we had the consolidation just a little bit there. Price ran up. I would have been very tempted to take that here. But again, this all comes back down to zooming in and out on your time frames, because even though this indicator shows that on the daily this is a great place to short, you've got to be looking at smaller time frames and larger time frames. So let's look at this on the daily. Very, very overbought on the daily. Let's look at the weekly here. This was right here. So if you're looking at a weekly chart and you're zooming in and out, even though the daily said this was very overbought, we were right here. That was the worst time to have listened to the indicator on the smaller time frame, because if you go back and you look at these larger time frames, you're not only getting momentum coming up, you have a divergence back here. And again, why I bought even more as price continued to drop below 22,000. That's why I did it. We saw a divergence here during consolidation. Price came back up. It was great. Like, you would not have wanted to sell here, especially if you believed we were near the bottom of the market, and depending on your time frame on things. Take a look at the monthly. This is another thing I like to do with these sort of indicators, is I like to look at all-time lows, especially when you get at very large time frames like months. Markets don't tend to stay down. Money is infinite, and That makes it very hard for prices to stay low for a long time. So when you're looking at these huge cycles, and this is something you need to probably keep in mind for the next cycle, whenever this one ends, who knows, is that look back at your indicators and look and see where the all-time low values were. Zoom in just a little bit. So we're looking back at, well, let's change back to the VLX chart since we're on a monthly, so we have more data. Let's look at this. Our lowest value back on the first cycle back here that we have data on the indicator was around 29. Okay, so our next lowest value, almost oversold, was 21. So we come down here, this one got down to 30. So what I'm looking at when I'm looking at cycles and when I'm wanting to buy in on these cycles, I'm wanting to look at these indicators like this and see when we're nearing our all-time lows on these particular values. Like I said, the markets, they don't tend to stay down. Let's take a look at something completely different just to show you. Let's take a look at SPX. Look at the monthly chart. Look at all-time lows, because these are your best buying opportunities on these longer charts, and it's kind of unreal. So we got an all-time low in March. Nope, 09. I'm sorry. I was thinking COVID, but COVID was just, that was over within no time. Look, this was over a year, and you could have been very close to timing the bottom if you were looking at all-time low values. So just kind of take an average of where these all-time low values are. You know, a lot of them are around here, around 32. You had some around 21. So let's go back and look and see if you started buying at 32 and you scaled into a position from there. So since that's where a lot of the lower values are, you would have started here towards the top. That's not very good. I think what you would be doing here is you'd be looking for a much larger drawdown compared. But, you know, that isn't terrible if you consider you think the market's going to continue going up. I could see you getting into one here. But if you really wanted a long, wait till it comes back to 32. Buy, 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 buy. And what I like to do, break up in DCA at different times, set levels based on moving averages. See if I can get my moving averages on here now. Yes, maybe. Okay, there we go. So you break that 100, you're going to be pretty certain that you're going to be coming down to here. So I would set entries here. And then honestly, anywhere below that, just buy whenever I had money. You know the market's going to come back up. They're not going to let it die. They're going to print money until they fix it. That's pretty much the only thing you need to know about the stock market. As bad as it gets, they're going to fix it. Individual stocks may not live, but ETFs, combined ETFs, they're going to be fine. You know, these collections, the SPX, DJI, they're all going to be fine, really. So these are just incredible opportunities to make a ton of money. They're not going to let these things fall. The only chance, really, the market completely imploding and never recovering would be losing a war. You know, just losing control of the government, and then other people take over the companies. You lost all your ownership anyway. It doesn't even matter at that point. Your money's worthless, as it was anyway. That's something to keep in mind on these big drawdowns. And looking at SPX there, let's look at Ethereum. Might as well. Let's look at all-time lows for Ethereum and see if you can see where the cycle bottom might have been. This one's a little bit shorter with history. So you don't really get the same picture, but you kind of take an average of these lows. Let's look back here. We had a low around 26, and we had a low around 35. By the way, that was a divergence. Maybe not really. Close to it. Very strong signal that it would have been the end of the bear market there anyway, though, since your trend changed. But look at the average values here. You got 36, 30. We come over here at the end of this huge drawdown. So we see a huge drawdown in price. Our indicators are near or lower than some of the previous lows. Look at this. You're buying 50%, 80% down from the all-time highs, and you're averaging in. After you get that, you get near the all-time lows on here. You average in. Your price just creeps further down on your entry. And now, look how much profit you would be in if you just looked further out. Okay? So, everything that I'm looking at, zooming in and out on smaller time frames, if you're looking at minute charts at all, that means you're probably day trading. I wouldn't worry too much about the 1 minute, 5 minute, 15-minute chart, even if you're trying to trade for weeks or years or for a whole cycle. If you're wanting to trade a cycle, yeah, go back here. Focus on making purchases near lows. That's what I do. Again, no financial advice here, but just look at the pattern. It's there. And this goes on with everything we look at. Oh, look at gold. Go near an average low right here. That was my head's probably in the way. Near an average low here. So you would have bought around here. Near an average low here. You would have bought around this low. Got an average low here. That one didn't work out. This one, it worked out for a month or two. Some of them work much better than others. Gold is one of those really weird things. And I don't even think this is the actual gold chart. That's just a trust. Here we go. This is a monthly chart on gold. The all-time lows going all the way back here. I don't know why the indicator doesn't load any further back, but looking at all-time lows back here, I would say looking at this chart going forward in the future, I would kind of disregard those and focus on more recent ones because, look, these go back before 2000. I wouldn't even consider that. You've got much more clustered here. So looking around 40. So if you start buying as we approach 40, let's say you got one here that wasn't too good. One here that wasn't too good. You got one here, good. Here, very good. Here, very good. It works even better though with Bitcoin. It does. Like I said, individual things works less well with because individual things can fail. Let's look at some stock like AT&T. Wow, this is a monthly chart for AT&T. Their all-time lows down around 8. Wasn't a good buy. Honestly, you got the divergence there. That's a very quick divergence on a monthly chart. You probably would have lucked out if you held it for a year, but you probably wouldn't have sold if you're trading on a monthly chart after just 1 year. Okay? But if you're trying to time maybe a swing trade after 6, 12 months, then yeah, you might have sold and had some good profit there. But just looking at these values coming down, this is just a stock that's not done well. Like I said, you look at individual stocks, this is what happens. They can go against the trend, they can go against indicators, just like individual cryptos as well. I want to think of like an ETF that would be good to. Let's look at QQQ. It's a popular one. Look at the all-time lows on QQQ for this particular indicator. All-time lows back here. We got a lot ranging around 26 all the way down to 20. And I guarantee you this one's close enough, I would have looked at it as well. But look at this. Anytime it touched the green, very bottom. Touch the green, very bottom. Come down very close to the green, you would have been very tempted. I would have probably been wanting to start buying. Even though we didn't get all the way down to the green, that's fine. You want to start buying it. Well, I want to start buying as soon as I start getting close to these values, because I know the bottom is coming. It may not happen for 6 more months, but if I start my purchases, I know that I've got a huge drawdown from the top already. This is, based on a basket of stocks. So we know they're not all going to fail. And the way the stock market works, they're going to rig it until, the market recovers. So these things will come back up over time. It's just inevitable. Like I said, they're not going to let it fail. They've got infinite money. They're going to make laws. They're going to do grants. They're going to do favors. The market will recover. They might let it get really bad first, but it will recover. That's why we're talking about looking at all-time low values on indicators here. Oh boy, I think that's all for the TA for now that I want to cover. It's been a while. I wanted to go over some really high-level stuff. Like I said, it's been like a year or more, 2 years maybe, since I made a video. And I think talking about cycles and hitting very low values is a good point. Because if I don't make another video for a while, at least you'll have kind of this in the back of your mind to think of going forward. And like I said, it's helped me a ton. Go back to BLX, and I'll leave it on here, show you around the bottoms where we were. Works really well with Bitcoin with a very limited supply. As long as the blockchain doesn't break, there isn't a gigantic bug found that can't be fixed. Going down. Even if they find a bug in Bitcoin, as long as they can fix it, it'll recover eventually. It may not recover as well if they lose a lot of faith in it, but as long as they can fix it, it'll be fine. Just look at Ethereum. It had some major issues going on early in its life, and it survived. It upgraded, it moved on, it's fine. One thing you need to be very aware of is the Bitcoin halving. We are only 29 days away from it. In the past, we've sold off from this for whatever reason. We would think that this would be very, very good, and it is. Just usually not immediately for whatever reason. Just something to keep in mind, that there will probably be a lot of volatility around this particular time. April 17th is right now what they're expecting, of course, based on how blocks are mined and the hashing speed. It's going to vary. This is not set in stone by any mean if you're kind of new to this stuff. So just be prepared. It's going to be in around 29 days. It could be sooner, it could be later, but somewhere around this, something to keep an eye on. There's going to be increased volatility. Doesn't mean it's going to be good. It just means that there's probably going to be increased volatility as there's a big news event. It's going to go all over media, particularly with these new ETFs. Probably going to be a lot going on actual TV news as far as that's concerned. And also something to keep an eye on. Don't trade shitcoins. Don't do it. Don't do the meme coins. Don't do none of that stuff. This is the kind of stuff you're going to run into. You're going to run into horrible people who scam you. They're looking to scam you. If you ever check your wallets, you'll have messages. If you've interacted with some of these crappy coins, tokens, memes, whatever, if you've interacted with those, they can scan the blockchain to see your interactions with those tokens. They will send you messages. They will send you like bait tokens. They will send you tokens to get you to interact with their contract, which opens you up to attacks. I've programmed in Solidity. I can tell you that if you don't know what's in the contract and you can't read the code, you probably shouldn't be putting any money in. I mean, that goes for Bitcoin as well. If you can't read it, you don't understand it. It doesn't hurt as long as this is your decision and you're okay with it. But man, interacting with some of these smart blockchains, it's very dangerous. There's a lot of money to be made, but it is not the kind of money you want to deal with all of the issues that come with it. You're going to lose 99% of the time with meme coins. You're going to lose 99% of the times with altcoins unless you get into the cycle correctly, like we were just talking about, looking at lows. You could probably look at the alt cap, and that'd probably give you an idea. I forget what the ticker is for crypto cap. Crypto total market cap. Excluding Bitcoin. Here we go. This is the one. But yeah, look at the all-time lows. It might not be a bad idea to, work your way in to alts around the all-time lows on these indicators. Perfectly fine. But again, individual coins and tokens, just like individual stocks, will fail. They will break this. This is an aggregate of all of the cryptos other than Bitcoin. So even though as a whole the whole market moves up, it only takes 1%, that 1% of coins to get lucky to move this whole thing up. Meanwhile, others continue to drop off and fail. It's very, very risky. You've really got to be invested with your time and your energy to be able to find winning plays like that. And if you're capable of doing that, that is great. More power to you. I don't want to waste my time doing that. I do well enough looking at Bitcoin and Ethereum and these ones that are that have been around a lot longer, that are very much top end of the market cap, have a lot of value already locked into them. I don't want to mess around with something like that unless, for whatever reason, I've got very high conviction and I'm on top of it, because these people can pull out from underneath of you at any moment. These teams, you cannot trust them, even if you think you can. You've got to stay on top of it. Even if you know the people running the project, you've got to stay on top of it. All it takes is for someone on that team, just one person on that team in a critical position, to bug out, and the whole project's done with. Especially these projects that don't have any product. Meme coins, what are we doing? Like, you don't even know what's in the contract that you're investing into. You could be just giving them these things, and okay, so you can program it to where it'll show you having a balance of this token, but you can't even send the token even though you have a balance of the token. So you can buy into something that's going to completely trick you. That's why you need to, not that anyone actually does that, but you can do tricky things like that with Solidity. You can make it look like a legit contract, but the code behind it can do some pretty nasty things with whatever you put into the contract. I just would not touch anything like that. And if you do try to do that, I would definitely recommend not using whatever your main wallet is. Now, I'm not giving you financial advice, of course, but if you do go to try and touch something like that, use a different wallet. Use a different wallet. Move a small amount to a new wallet, and from there, try to make some plays. But it's just way too risky. You don't know what's going to happen. Other thing I want to look at was Ethereum. This is something you need to keep an eye on. Ethereum is burning more than 2 times the amount of Ethereum that is being created per minute. In 7 days, 35,000 have been burned. I've been on this ever since they implemented this EIP. And let's see. This is all time. Since they implemented the EIP to burn, 4.1 million, almost 4.2 million Ethereum have been burned, destroyed. Now, even though there's more being issued due to staking, these are Ethereum that are never going to return. And let's see, at the 3,500. So multiply that by 3,500. That's how much USD is off limits now. That I imagine a lot of these people would want to have back. And you get to see what they're spending it on over here with the burn leaderboards. OpenSea, a lot of people lost a lot of money to fees on OpenSea. Same thing with Uniswap. You know, at least these are people trying to make trades to make money. They probably understand the fees that they're paying on these things. Another OpenSea contract. I don't know what some of these are. I guess some of these are games or other tokens or other DeFi, SushiSwap. Shiba Inu. Shiba Inu alone has helped Ethereum burn over 19,000 of them. Axie Infinity, that was really popular last cycle for a little while, over 17,000. A lot of stuff just wasted. Here's a bridge to Matic. We've burnt 13,420 Ethereum, sending Ethereum to a bridge so that we can send Ethereum for cheaper. I think it's kind of silly that people are so wasteful with their Ethereum fees, but it's just something you need to keep in mind. Supply is predicted. There's that. Supply is predicted to stabilize. Here we go. Predicted to stabilize at 83 million over time based on their current estimates. Current supply, let's see, 120 million. It's going to take many, many years to get down to that value based on the current usage. And that's something you have to understand, that in order for the total supply of Ethereum to get down to that low, the usage and the fees have to remain this high in perpetuity. So something to keep in mind. I doubt it's going to, so you could probably expect a number that's going to be higher than that. But what you're looking at is a asset that's proven to be deflationary. There's less and less of it every single block. Well, not every single block, but on average, every single block there is less. So this is also looking at an ETF to be approved. Bitcoin, while I believe Bitcoin is the better long-term solution for a base layer, Ethereum, and greed of people are going to kick in. You're going to see people really FOMO into Ethereum. Fees are going to get crazy if they approve this ETF. Now, there's no near guarantee like there was with the Bitcoin ETF that it would get approved, because I don't believe there's any lawsuit related to the Ethereum ETF that they're looking at getting approved. So just something to consider. It could get delayed and pushed off. Wouldn't be too good for it, but you got to think eventually there will be the Ethereum ETF. A lot of people have been buying into Ethereum this year, knowing that the ETF approval, I believe, is in May, potentially. So just something to consider, that I think greed will hit Ethereum even harder than it does Bitcoin on the ETF. I think they'll make a very big deal about it possibly being even better than Bitcoin because it is deflationary. You know, Bitcoin is still creating new coins that aren't getting offset, whereas even though ETH is creating more coins, they're getting offset completely, and you're actually reducing the supply. So there's going to be a very big argument, and they're going to argue about functionality, like with smart contracts and such. So there's going to be a lot of politics within finance about people saying which one you should pick, I believe. But eventually, we're going to wind up with a bunch of ETFs if Ethereum gets approved. Because if you approve Ethereum as an ETF, there are many, many, many other coins that need to be approved as an ETF eventually. And you're just going to hear that same argument. So the same arguments that have played out in previous cycles within the crypto community are going to play out with people traditional finance stuff. You're going to see them. Oh no, why would we ever get into Bitcoin? It can't even, have a smart contract, and that's what they're going to think. There are possibilities for these, and they're going to go through the same learning curve, the same learning cycle that we all kind of went through. If you came to the conclusion that Bitcoin is all you really need, it's the base layer. Ethereum is essentially a second layer for Bitcoin. I know it hurts a lot of people to hear that, but it is the truth. Ethereum allows you, through wrapped Bitcoin, to transact the equivalent of Bitcoin on Ethereum, and it goes faster than the Bitcoin blockchain, and it uses its own token. So let's think about a layer 2 for Ethereum. Matic. Matic is its own coin. It allows you to send Ethereum faster. Yeah, it pretty much meets all the metrics of layer 2 there. It's an alternative way to do these. It's its own token. It's faster. Like it allows you to transact in Ethereum on the chain. How is it much different than Ethereum acting as a layer 2 for Bitcoin? I think Ethereum tries to be its own chain, and it is, just like Matic is its own chain. But people have to understand that what makes Bitcoin so great is that it doesn't have those features. It doesn't act as a layer 2 for anything else. That's why it's the daddy of all of the crypto, because you can't put those crappy ones on it. Now that they've made a lot of changes with the technology recently, I haven't been able to keep up with all the details on it. You got ordinals. I haven't really paid much attention to it. I'm really just worried about if block space becomes an issue again when they start filling up blocks. But I don't believe they're going to anytime soon. But yeah, this is pretty awesome. Greed is what drives every cycle. Of course, we've got infinite money, fiat. Between infinite money and greed, you just got to find a good narrative. And I think Ethereum is a very good narrative to make money on, in my opinion. If this ETF, there's gonna be a lot of people trying to make a lot of money on it because they can. They see an opportunity, they're going to take it. People are greedy. I've been saying this for years and years about crypto, and you want to know, there's all of these shit coins and meme coins, and I know I don't touch them, but why are they successful? Think about it. People are greedy. They want to make $1 million off a $10 investment. They want to buy some horrible meme coin that has no effort into it all, that might be a scam, that might, drain their balance from their main wallet because they want $1 million for 10. People are greedy. They're going to continue to try and push whatever narrative they can to make money for themselves. And as a Christian myself, I understand that people are greedy. They're going to try and do these things. You have to see people for what they really are, and humanity for what it really is. Most of these people who do finance are so greedy they're blinded by it. This sin overcomes them, and it drives everything that they do. And as an observer, you can look back and you can see the patterns in their behavior, and not only their behavior, but the other people like them who know if they can't observe these things themselves, they're going to make the same mistakes. They're going to be greedy. They're going to go down that path. That's why I warn you not to get into those things. But there are ways to make money finding other people's greed and finding narratives to where they're going to get greedy. And it's kind of an awful game, you know. Zero sum finance is really tricky ethically, but I really do think Ethereum, if Bitcoin doesn't take off, it's going to be Ethereum, and I think the world needs a blockchain. Solana, I don't understand the hype. The chain's down from time to time completely. It's associated with FTX, major scams. That one I don't really understand quite as well. I know the fees are a lot lower than Ethereum, even though usage is still pretty high. Got pretty good technology behind it. But there's so many greedy people with their hands in Ethereum already. It's going to take a huge effort for Solana past Ethereum. But I've kind of rambled on about that particular topic. I don't want to bore you too much. I think I'm going to be done with the video now. I appreciate everyone joining in on the live. Hopefully I can do these a little bit more. I had a lot of very high level stuff to discuss today, some fundamental principles to narratives that I'm expecting to happen. So please follow me on X. It's BigBits.io on X. Take a risk here and actually look at it. There you go. BigBits.io. Where is it? Profile. There you go. BigBits.io. I talk about Kentucky basketball a lot because I'm from Kentucky here. But there you go. John Bollinger. Told you all about him earlier in the video. Let's see if I can find any good TA back here. There's some TA. I told you I've been active on Twitter. Please follow me there if you haven't already. Here we go. I was talking about the all-time high monthly close pretty much before anyone else, February 28th. It seemed like such an impossible thing to consider until things really broke out there. But I noticed a lot of big accounts started posting about that afterwards. Now, this one was really cool. This particular post, they're talking about the ETF Bitcoin holdings over time. So you can see where the GBTC ETF holdings kind of transferred over into BlackRock and some of these other particular institutions. And I post memes. Yeah, so this is my chart. This was from February 27th of this year, but this was from a year ago, so that would be February 2023. That kind of looks a little bit like what happened, except price went up, consolidated a little bit further, and then went up like crazy. So I told you all 22K earlier in the video. That's where I wanted to start buying, and I wanted a DCA within this range. I thought this was really good range. The blue range was where I wanted to like sell a car or a kidney and buy Bitcoin. It never came. That's probably a good thing because I could use my kidney, right? Oh man, and poor Datadash. This is something I've been looking at recently. I feel bad for the dude. He stayed bearish the whole way up. Like, look at this. This was, I posted this like a few weeks ago. Like, we're looking at 9-10 months ago. He has an entire page in 2023 of bearish Bitcoin posts. Like, literally, every video has a Bitcoin logo. Every video has red in it and the price going down. And this was in 2023. What happened with Bitcoin in 2023? Monthly chart. Start 2023, January, from 16,000, and we ended the year at 42.5 with only 3 red months. I felt so bad. He used to be so good about these things, but he stayed bearish all 2023. I don't understand. I wish the guy luck. I think he took a beating on some some investments and time and stuff that he made. All right, thank you, Daryl. I didn't even see your message right now. I'm not used to doing live streams. It's been so long. Uh, I'm not really doing much of the Pine Script stuff right now. I haven't had a need to. Like, I've got a really good pattern on my trading, and I only need one or two indicators. I don't need to create a lot more. This stochastic weights advanced indicator that I came up with, that's all I need, honestly. I use it with the moving averages to find support and resistance, and I'm good. I had a heck of a time, though. I should make a video where I'm kind of talking about what's happened since the last one, because it's been a heck of a journey, man. My wife almost died. Kind of unreal. And when I say she almost died, like she had to get a blood transfusion, emergency blood transfusion. Uh, Things were terrible for a while, and it's part of the reason why it's taken me so long to come back to making videos. Is we're finally getting into a place where one, I have time. I didn't have time for the longest time because I was taking care of my wife. Like, she for real was stuck in a recliner for most of last year, and I had to pretty much wait on her the whole time because she had so many surgeries and stuff. Man, I'll go into detail about that another time. But I appreciate you coming by and checking out the video. I really do. I'm gonna try and talk about this. I want to stay. I want to get back to being involved. I want to get back to making videos, talk about current things, and put a reasonable perspective on things. I don't care how big my channel gets. I really don't. I like to provide good content. I don't like to provide necessarily entertaining content. I like to think I'm fairly entertaining in the sense that I can make a few jokes from time to time and give you very good information or give you very good insights. But what I don't like are the personalities within crypto space, particularly YouTube, Twitter, TikTok, all of those things. You get people who are they're indirect, I should say. They will act one way and say things one way, but do things completely different. I think there's a lot of people doing this thing for popularity, for show, for money. Like I said, greed. It gets them all, man. If they don't have a strong foundation in faith, they get caught up in greed. And I think that kind of goes back to some of the people staying bearish, permanently bearish. You're mad you missed out. You want to make all that money back making a short. You've got to stay grounded. And I think faith is a great way to stay grounded when you're trading. Keep a solid perspective, and of course, zooming in and out of your time frames. Don't get locked into a minute chart. Whatever you do, don't get locked into a 1 minute chart. Going back through all these things, I still have been retweeting some of the Pine Coder stuff, but I don't think I've done that for a while. Oh look, I called for a bounce July 27th of 2023. How did that go? July 27th. Ooh, we were still consolidating. That one wasn't very good, but again, I wasn't making plays above this range here. I was just kind of hopeful. Like I said, I've been really just sitting on my hands. I didn't send any coins to the exchange to even consider to sell until we hit 68K. I still haven't sold anything. I'm very confident over time things are going to go up even higher, but I needed to have something on the exchange in case, just in case, we got that God candle that sent us to 100K overnight. I'd be able to sell without having to try and pay ridiculous fees to get my coins on the exchange quick enough to sell. Lots of talk about the ETFs and flow, and that's something else you have to really consider coming up soon with the ETF flow. Huge inflows coming in on ETF. The inflows coming in very much greatly exceeding outflows. And all of the Bitcoin they have to buy because of those inflows is so far exceeding the daily issuance. So we go back and we look at ETH. I always say F for whatever reason. We look at ETH. Its burn rate, its issuance offset is 1.7x. If you think about an offset in purchasing compared to inflation, so every day they're buying about 10,000 Bitcoin, but they're only making 900 new Bitcoin a day through mining right now. You're looking at a 10x purchasing offset compared to issuance. So we're going to have the halving in 29 days or so. And if all things were the same with demand, supply decreases. So that's why this halving could be a little bit different. And it's another reason why I'm keeping a very close eye on the inflows on the ETF. Something very much you need to keep an eye on if you're looking to trade any time around the halving, in my opinion. Just because, like I said, I think there's going to be a lot of volatility then around the halving. And I think you'll get a very good picture of what's going on with the ETF inflow data from day to day. On top of course, the actual price. You're going to see the price move before you get the inflow data. But there's been days where the inflows have been very surprising considering the price action. Like last week, price went down several days. But inflows were record highs. I believe they were record highs. I know the trading volume was at record highs. I don't know about inflows, but still, we still had inflows on days where there's red candles. So these are people who probably didn't have ETFs selling more than the people who do. Just something to keep an eye on with those particular trends. You've got to think the ETFs have had a big part to play in the price going up lately. You see the ETF was approved here. You had the quick spike where people bought the news. There was that GBDC outflow originally. I think the smart people waited to buy into ETFs until the outflows started to decrease. They did, and it's been pretty much up ever since. So very important data to keep an eye on. Going back here, see if there's anything interesting. This was something I was looking at for a while there when we had all the bank collapses. Just comparing Bitcoin to regional banks, it approached all-time highs versus regional banks back in May of 2023. It was just kind of funny to take a look at. Let's see. Some political stuff. I like to keep up with the legal stuff in crypto as well. I'd been following a lot of the stuff going on with the SEC, Coinbase, the ETF. These things are very important to understand. Taking a look at what actions are being done on the back end are very important. Understanding what's likely to happen in the future. Politicians say a lot of stuff that will never happen. Look at Elizabeth Warren, for example. She's very much against crypto. She says a lot of things, but and she puts a lot of pressure on people to do things against crypto, but nothing's happening from it. And that's because on the back end, all the legal stuff has been kind of working out for it. So unless they pass legislation, unless there is legislation that's going to pass that has a negative outcome, I don't really see their words as having very much meaning whatsoever. I would pretty much ignore politicians. Now, people in positions such as Gensler, want to probably pay attention to their words a little bit more. Decision makers, I should say. If somebody has authority over a decision that will impact them, you listen to them. But politicians, you can't listen to any of them. Republican, Democrat, it does you no good. And look at what companies are doing. I think if you paid attention to Coinbase and what they were doing with the ETF, you would have known that that stock was a huge buy when the price was incredibly low. You would have seen on all the ETF filings, if you were paying attention, that they were going to be the custodian. How is that bearish for Coinbase? But price was so low, and we knew based on other court cases, that the ETF approval was imminent. It was not going to get delayed or declined, I should say. It's not going to get declined again because they pretty much had to approve it due to the lawsuits. They pretty much had no choice. And Coinbase was the custodian for almost all of these. Like, these are the things, if you pay attention to, gives you a huge advantage over people. And you can share these things like I do on Twitter, talking about, these things are happening. Like, why is the price this low? Here's what's likely going to happen. People don't pay attention to this stuff. They don't care. But this is your money. Why are you... Then this is why I also say don't get into meme coins and shit coins, because if you're not paying attention to these things, you're going to lose. You might get lucky from time to time, but you're going to lose. Like when it comes to these companies like Coinbase, if you're paying attention to the details, you see the narrative being built. All you got to wait is for the hype to come around, and the ETF came around, and Coinbase price shot up like crazy. You should have seen it coming. Just like you can also see a bunch of failures ahead as well when you start looking at some of these metrics that are all skewed to make it seem like they're better than they really are. Take a look at an unemployment rate in the world, well, in the US, I should say, how it's calculated. Just take a look at how it's calculated. Do you believe it? Does unemployment, if you think of the word unemployment, and you would try to understand what the unemployment rate is without the legal definition from the US government, you would think that would mean people who want to work but can't, or can't find work. Okay, that's true, but only for a certain period of time. So once you've been unemployed for so long, you're not even counted. It's ridiculous. They game these numbers. Inflation, that's another one that if you were watching this as it was happening over the last few years, you would know that they changed how they calculate inflation. And the other thing is, a lot of people don't even understand those inflation numbers and why they're so bad. They see the news headlines that inflation has come down. They think prices are coming down. No, it's just that they aren't going up as quick as they used to. People don't understand these things. And what really kills me is there's a lot of people who trade with a lot of money who don't understand that either. People, I guess, born into money, they don't understand inflation. They don't understand some of these things. It's very important to educate yourself on what you're working with or what you're trying to get into. Stay involved with it. It's just incredibly important. Oh yeah, this was from April of 2023. Coinbase says the exchange will integrate Lightning Network. I don't think that's happened just yet. I wonder if they're still working on that. But again, these are things you need to keep an eye on. Not only because this was good for Coinbase stock, potentially. It's very good for Bitcoin as well. we need a layer 2 for Bitcoin to take off that has independence from a token. So if you think of Lightning Network, if you were to create a Lightning token to use that network and put smart contracts on it, it would just be Ethereum. A much faster Ethereum, but might as well be any other layer 2 if you were to give it its own token. So a base layer based network where you're just trading in the actual base token is very important. That's something you don't see a lot. And why is that? It goes back to greed. People are greedy. They're going to make their own token. They're going to try and charge you to use their network when we have Bitcoin already. We don't really need it, but it's going to be pushed because people are greedy. Oh, and I do pay attention to all the MicroStrategy purchases. Purchased over the entire time. Oh, hey, here's my thread on that. Here's some TA for you. Bitcoin at the one-day resistance, hitting a downward sloping band with momentum trends going down. All things considered, price movement is incredibly bullish. This will be a thread. Dig with me. This was posted April 5th, 2023. I think you could tell we were hitting a bull market right here, and it's hard to see probably. I'm not very much zoomed in, but there was a parabolic move from the bottom. To me, that was the clearest sign that we were no longer going to be in a bear market. Spreads, again, those squares that I was talking about. Yeah, I did pretty good on the bear market this time, just DCNA. But I think I'm going to call that for the video. Thank you for those of you all who stepped around. D. Lee, I just now saw your message. Prayers to my family. Where do you find the inflow numbers? D. Lee, I am so sorry, man. I'm not paying attention to chat whatsoever. My bad. I find them on Twitter. Look at BitMEX Research. Honestly, I just follow them on Twitter. I'm sure they're probably on some sort of website somewhere, but I don't really care enough. And I don't know why that's not loading correctly. There we go. Here we go. So March 16th, Bitcoin ETF flow, 15th of March 2024, all data in. Total net inflow of 198 million for the day. So they usually post something like this every day. I don't know where exactly they're getting the data from, but you can trust BitMEX Research. They do a lot of really good stuff. By the way, Arthur Hayes, creator of BitMEX, if you're familiar with the space, you'd know BitMEX has been around for a while, was like the biggest perpetual swap exchange for a long time. He predicts Bitcoin will go to $1 million. And he also very famously called Ethereum a shitcoin and said it was going to be worth a 2-digit. He called it a 2-digit shitcoin in the previous cycle, and sure enough, it got down to like $80 in the previous cycle. He does a pretty good job with his predictions, so he's someone I would pay attention to as well. Something to keep an eye on there. So we only had, let's see, 1 day of outflows in this range. Pretty good. But these tell you the different ETFs. So IBIT, FBTC, BitB. You can see outflows are in red. So you can see GBTC, people have been selling that. And if you've been paying attention, you'll know that the reason they've been selling it is because they've been locked into it for a long time. They haven't had an opportunity to really sell it. But that and their fees, they kept their fees higher than all of the others because they already had customers and they wanted to collect fees on their current customers. Kind of an odd decision to keep their fees so high when everybody else went to pretty much zero, but they did, and they're collecting a lot in fees. But it's also getting people off of their product. for the meantime. So I think I just keep going. Another thing to consider though is that when you look at the inflows and outflows, what's going to happen when GBTC stops their outflows? It's just going to be new participants buying and maybe a few people taking profit or getting out of their positions. So watching these inflows and outflows over the next few months are going to be huge. That, and you also are going to want to pay attention to when these fee structures change. So for right now, they've got like promotional fee periods, or there's no fees, or there's 0.25% fees, where they will be more like 1% in the future. So what's going to happen eventually is some of these are going to change their fee structure to what they want them to be and go back to their full fee as opposed to this promotional fee. And when they do that, you might have to watch out for some outflow from one of these ETFs to another one with lower fees, because they're trying to basically arb the market and get the best fees with the same price action, right? It's all built on Bitcoin. Why does it matter if I have my ETF money with IBIT or FBTC if one's charging way more fees? So I think you're going to see changing of hands in the ETFs when the fee structures start to settle. And that could create some volatility at that particular time, but who knows where we're going to go in the meantime between. I feel so bad for missing your message, dude. If anyone else has anything else to say, go ahead and say it now, because I'm actually watching chat for just a second here. I got so caught up trying to talk to y'all about everything and catch everyone up on what's going on, what's been going on. I haven't paid any attention. But I'm about to end the video. I got some other stuff I'm working on. As a hobby, I've been selling sports cards and Pokemon cards just for fun. That's been a blast. I'm working on that. You can see, if you saw it earlier, Chase Breaks is my sports card account. I love doing that. That's fun. But my favorite thing to do is to buy Bitcoin. All right, but I'm going to leave it at that. Please subscribe, like the video if you haven't already. This kind of went on a lot longer than I thought it would. Man, we're at like an hour and a half. I talked the whole time. No one told me to shut up or nothing. Yeah, and I make myself laugh. I'm a nerd like that. But thank you all. Hopefully we will have another live stream very soon. I want to try and do these more often. I want to get the channel back and active. And I don't know if I'm going to be making a lot of tutorials, but I definitely want to be talking about Bitcoin and Ethereum and some of these other things. But thank you all. God bless. So glad to be back and making some. Thank you all. Have a good day.